Hey, where are you all putting your money in this kind of time of uncertainty? Welcome to the Real Estate Minute Show. Thanks for tuning in again this week. My name is Jay Lieberman with Lieberman Realty Group. And here we share things that about real estate and a lot of things, wealth building and kind of legacy planning for the future and for the future of your children and their children, et cetera. And one of the main questions these days is where the hell are you putting your money? And I get that question periodically, where Jay, where are you putting your money? And I share. So I thought I'd share, what I'm doing, what I have done and what I'm doing right now. I've talked about it in previous videos as well, kind of what things are doing in the market, what I'm nervous about. And what I am nervous about is just, there's a lot of global uncertainty. It's not just in this country where you can kind of monitor it. And we have our own crap, right? I mean, politics is nuts. The market swings based on who said what on a debate or TV. But there's a lot of global influences that press down on my decisions and on our markets, my decisions on what to do based on that. And so I've really stripped a lot of our kind of portfolio, Michelle and I, out of market risk and put into just a lot more cash positions. And I'm not real heavy in real estate right now, which is interesting. So I thought I'd share this with you and show you kind of where I am at these days. So these are general categories of my kind of investment. They're all really kind of nuanced in between there, but these are just the main highlights of it. Just a few mutual funds that are really just index funds, money market funds, and various other mutual funds that are more niche, like international funds and things like that. Then there's CDs, cash, notes. I invest in, you probably heard before on the show, I invest in small residential mortgage notes. There's also a couple businesses that I invest in, some land, bonds, my house, metals, personal effects, smaller stuff. But these are kind of the breakdown of where I'm at now. Before I should say this. If you look at the market risk, my market risk is about 25%. It's really the combination of the index fund and the various mutual funds, okay? And that used to be 45. I brought that down to 25, and I'm actually probably going to bring it down under 20% very, very shortly here because the S&P index and everything is so skyrocket high, it makes me nervous. My cash position now is about 54%, which is a combination of CDs, cash, and money market. And that is, used to be 25%. I would never buy a CD, but obviously we're looking at, 5% interest rates, and it's very, very attractive. A lot of people have very similar moves. And that's what I have done, and spread it around multiple banks, obviously, because we have, FDIC insurance issues. And I'm very careful what banks I put it in. And that's important too. Don't just, as a side note, don't just go into the highest rate. Actually do some research on the bank, see what it's rated. It could be junk and you invested in it, and now you've got to deal with the FDIC if they bolt. Then some other investments kind of sporadically. I'm at about 11%, which includes notes and business interests and things. And those are a little bit more risky. A lot of that stuff could just go away tomorrow. That used to be actually a little bit lower. It actually used to be like 0%, and then I raised it up to about 11 because I wanted to diversify in a few different fields and things. And my real estate is only about 9%, which includes my house. And really what I own right now as far as real estate is a piece of land, actually 3 parcels of land here in North Carolina. That's it. I've been sitting on the sideline on the real estate market because skyrocketing prices have just been nuts. And I'm not going to pay. I'm a real estate broker. I'm not going to pay into a high market. So that's kind of where I sit right now, and I'm comfy. I'm actually going to reduce that 25% market risk if I make more changes, probably about 5-6%. Put that more into cash, and just wait it out till after the election to see where things go. I'm okay having made what I made so far this year with this market run over 41,000. I'm okay with it. I'm okay taking it off, and I'm okay losing any more profit in the future because I'm going to take some of that off the table and just kind of relax for a second. So you might want to look at that. You might want to just look at your overall portfolio, which is kind of why I'm showing this, about where to go and what to do. We'll see you next time in the Real Estate Minute Show. Thanks for hanging out with me just for a minute. See you next week.